Hey guys, welcome back to the channel. Today we're going to be going over why you need to file your back taxes or else, because if the or else it will be something you don't want to deal with. So let's get to it. Filing your back taxes. How many do you need to file? Do you want to file more than the required amount? We're going to go over some strategies in order for you to get the best possible outcome for your tax debt case. All right, so I'm gonna bring you to my screen here, and I'm gonna show you what the IRS requires in order to get compliant. Okay, if you look here, you'll see policy statement 5-133 in delinquent returns. And this is enforcement for filing requirements. The requirement is 6 years. So you need to file not more than 6 years of your past tax returns. Why 6 years, you may say? Because let's just say that you haven't filed in 20 years. IRS doesn't want to go through all your taxes and figure out how much you owe for like 10 years. Who has those records? Who is maintaining all that stuff? How are they gonna enforce those last 10 years? The last 6 years, is really manageable. Usually your banks will save documents from those 6 years. And it makes it easier for the IRS. It makes it easier for you as the client in order to get compliant in the eyes of the IRS. So you need to watch out for traps. And what I mean by traps, so the IRS may only want 6 years, but that doesn't necessarily your state only wants 6 years. Your state may want all the back taxes and tax returns that you didn't file. And so in order to know this, you got to go through your state laws and figure out what they want from you. And hopefully by now you've realized that this might be a little bit harder to figure out by your own. So maybe you might want to get an enrolled agent, a CPA, or a tax attorney to help you figure out this process. Another reason why we might file more tax returns, if it helps you and your financial situations for the following years of the taxes. So for example, let's just say that you own and operate a business and you had a lot of losses and you want to accumulate those net operating losses. So one way, or one of the strategies we might have, is to file old tax returns, especially if you have losses. Also, you may want to file old tax returns if you have refunds. Let's just say the last 3 years, you're actually supposed to get a refund, and then the IRS said that you owe $10,000, but then once you filed your old taxes, it says that they actually owe you money. This is a perfect example of why you might want to file those back taxes, especially in the last 3 years. One thing I want to go over is the W-2 versus 1099. Tax cases are usually easier if you're a W-2 employee. Why is this? One, W-2 employees usually get a pay stub, right? And this pay stub allows you to track all your income that comes in, and usually there's tax withhold in all your pay stubs. A 1099 employee, usually they just give you the income, and then eventually you would pay your tax bill at the end of the year, or you're supposed to be making quarterly payments. A lot of people don't do that. For example, real estate agents. Real estate agents, they make the sale, they take all this money, they don't pay their taxes. So they're supposed to be making their quarterly estimated payments, or they're supposed to pay at the end of the year. But sometimes real estate agents, let's just say they don't make a sale that year, and then maybe they go a couple years without making a sale, and then all of a sudden, they get into a situation where they don't file their taxes for a while. Some states and the Fed, what they might do is something called a substitute for return. And what is that? So substitute for return is basically the IRS filing your taxes for you. Let's just say like they get the information they got from your job, and they said, hey, you made this much amount of money. He owes this much in taxes. That could be a good thing for W-2 workers. It could not be. 1099 workers, it's usually for the worse. Let me show you an example. Let's go back to real estate again. Let's just say that a real estate agent usually makes around, let's just say $100,000 a year. But let's just say the market's been bad and he hasn't sold in 3 years and he hasn't filed his taxes. The IRS doesn't know that you didn't make any money or you did make money. What they'll do is a substitute for return, and they'll say, okay, he made like $100,000 the last few years. Let's just say $100,000. But in reality, you didn't make any money those 3 years. So you're going to get this abnormally large tax bill and you're going to have no money to show for it. So this is a perfect example of why you need to file your backlog taxes. If you found this information useful, please like this video so I know that you liked it, and subscribe so I know that you like the trend of videos I'm making. And if you need extra help, you can download this book. If you go to crushirsanxiety.com, you get a free copy, and it gives you 25 strategic steps in order to defeat your tax debt. Or you can buy it on Amazon or Kindle, whatever you like. And if you need help right now, go to andrewsamdiego.com and schedule an appointment. We'll get your tax problem solved. Until then, talk to you later.